Hello, and today we're going to be looking at the periodic inventory system. One thing that you need to know about the periodic inventory system is that you do not check every day. You only check at the end of the period. Periodic. So your keyword is period. Just remember that. Periodic, period, end of period. This is the big idea. This formula is very important for the periodic table, and it is cost of sales is equals to opening inventory plus purchases minus closing inventory. When you are busy with periodic inventory system, this is what you need to know. So when you buy stock, you are going to debit purchases and you're going to creditors control, also known as account payables, if the stock is being bought on credit by the company. But if it is being bought on cash by the company, then you are going to credit bank. Then when goods are being returned, you are going to credit purchases, returns, and then you're going to debit bank and or account payables. Depends whether the company bought the goods on cash or on credit. Right? Yeah. So basically, this is a reverse of this transaction. Think of it as a reverse of the buying of goods transaction. So if goods are not being bought, they're being returned back. So you just swap the accounts. But instead of having purchases now, you're gonna have purchases, returns. Then when you pay transport for other goods being bought, what you're going to do is you're going to debit the carriage on purchases, and then you're going to credit bank. We credit bank because money is coming out of the business. Always remember that when money comes out of the business, we credit bank if it was bought on cash. Remember, do not touch the inventory account during the year. Remember that. For the end of period, we use the cost of sales formula because now we're calculating inventory. Cost of sales is equals to opening feels like I spelled it incorrectly. Opening inventory plus purchases minus closing inventory. If you can see that properly. Closing inventory. At the end of the period, when calculating cost of sales, consider the net purchases and not the purchases. So to calculate the net purchases, you need to say purchases minus returns plus carriage. Given the following examples, cost of sale is equals to opening inventory plus net purchases minus closing purchases. So you are given that the opening inventory is equals to 1,000. Purchases is equals to 5,000, and then purchase return is equals to 500. Carriage is equals to 200, and closing inventory is equals to 100. What you're gonna do now is you can start by calculating the net purchase alone. Remember, we said net purchases is equals to purchases, and we're given that purchases is equals to 5,000 rand. So you can say 5,000 minus the purchase returns, which is now company's retaining is good, so they're not going to be part of inventory anymore. And then you add carriage because that is the amount that it cost the company to get those goods to them. So that counts as the inventory. Now for net purchases, you're gonna have 4,500. It's 4,300. Yes. So then now you're going to say cost of sales is equals to the 1,000 rand which was given to you plus the net purchases minus the closing inventory of 1,500, and that is going to be 5,300 minus 1,500. That is going to give you 3,800. for the cost of sales.